Imagine watching a coin respect every single level we mapped out, break structure exactly where it needed to, and now stand right at the edge of a potential upside continuation. That is exactly what is happening with Cardano right now, and the chart is finally showing the clarity traders have been waiting for. This is Shah, and let us walk through the full picture with clean narration so you can understand every move before it happens. Cardano is currently priced at 0.43. In our previous analysis, we highlighted two very important zones. The first was the downtrend line visible on the daily time frame, a line that has been capping price for a long time. The second was the support level at 0.38. Along with that support, we also marked a weekly order block ranging from 0.38 down to 0.32. This entire region was acting as a major demand zone, and we discussed that any tap into that zone could trigger a strong reaction. Exactly that played out. Price tapped the upper part of the weekly order block at 0.38 and immediately pumped from there. This reaction was the first major sign that buyers were active and the structure was preparing for a shift. Now, when we move to the 4-hour time frame, the picture becomes even clearer. The previous lower high has been broken and price has closed above it. That is a clean break of structure to the upside. After breaking that lower high, the price did retrace slightly, mainly following the pullback from Bitcoin. But the important part is that Cardano is still holding above the 0.38 support. As long as that support remains intact, the break of structure stays valid and the bullish bias does not change. The most important thing now is simple. Price must continue holding above that 0.38 region. That is still the key level. If Cardano maintains this pace, the next logical move is towards the next resistance, which sits around 0.50. That area aligns with the next supply zone, and it is also close to the same downtrend line we mapped earlier on the daily time frame. So price is approaching a confluence zone where horizontal resistance meets diagonal resistance. This is where the chart gets interesting. Breaking the downtrend line near that 0.50 resistance would not only give continuation but would also confirm a much larger shift in market structure on higher time frames. The direction is already leaning to the upside because the structure break on the 4-hour chart is confirmed. What matters now is continuation and maintaining strength above that base. If the support at 0.38 continues to hold, we should expect buyers to push price gradually towards that 0.50 zone. The market is no longer printing lower highs and lower lows. It has already flipped into forming higher lows and breaking previous highs. That is the behavior you look for when a trend wants to reverse and continue upward. So keep your eyes on the structure and the support. As long as the market respects these levels, the direction remains bullish, and the next move is likely a test of that upper resistance. If you enjoy these clean and simple breakdowns, make sure you stay connected so you never miss the next update.